private businesses are or can be relatively agile in the way they respond to some of the headwinds that we've seen in the market. Businesses are now being much more deliberate, much more thoughtful about what investment in AI actually means to them. You can make a real change, a step change, with carefully thought through successful M&A activity probably quicker in the current trading environment than you can do organically.
Welcome to the Insight in 15. I'm Krishna Grenville-Goebel, and today I'm joined by Euan West, Head of UK Regions at KPMG. Today we're going to be exploring some of the results from the KPMG Private Enterprise Barometer, and as usual, we've only got 15 minutes, so we're going to delve right in. Euan, before we start, briefly for our listeners, what is the KPMG Private Enterprise Barometer and what sort of businesses are in private enterprises?
Excellent. Well, thank you for the invite to join you today, Krishna. So from KPMG's perspective, private enterprises are privately owned organisations. They might be family businesses, they might be private equity-backed businesses. So the Private Enterprise Barometer is a survey of 1,500 private business owners from right across the UK, from Southampton to Aberdeen, across different sectors of our economy and a different scale as well. There's some, we included large, well-known names in there that everybody would recognise, and there's some fast growth, technology, heavy scale-up organisations as well at the other end.
So, Euan, that's a really representative mixture of businesses in private enterprises. We're seeing a lot of volatility in the market, the economy, tariffs, AI, lots of disruption going on. But yet the barometer says that sort of 87% of respondents are really confident about growth. Tell us a bit more about that. What's behind that figure?
Yeah, that's right. But at 87, that is a slight dip, actually, since the previous year. I guess we shouldn't be too surprised. If you think about the timing of our survey, I think when we went out to market, we were just on the back of the latest budget announcement. I think there was so many things trailed ahead of that, which would have had a big impact, potentially a big impact on the way businesses operate. I'm not surprised that we saw a slight downturn in people's confidence levels. And interestingly, we haven't quite seen that recover even post the budget. It was relatively benign in the end, but it did play through to business confidence. So I suspect that probably goes some way to explaining that slight dip. Now, having said that, 87% of our respondees were confident about their growth prospects, which is a fantastic reflection on the resilience, I think, of private businesses. Why is that? Well, I think they can still see opportunity is the reality, whether that's in investments that they're making in new products, new services, overseas markets, technology. All of these things are playing through and creating opportunity. I also think that there's probably a degree to which private businesses are or can be relatively agile in the way they respond to some of the headwinds that we've seen in the market. They can make decisions quite quickly. There tends to be an owner-manager somewhere at the helm who can make swift decisions.
The barometer shows that there's quite a lot of investment by private enterprises in technology, AI, product and service innovation. So what kind of patterns are you seeing in this investment?
Some really interesting findings from this year's barometer. I guess I wasn't particularly surprised to see a slight dip around things like sustainability and ESG. There was a slight dip around talent and workforce and skills. Now, that's interesting. The conversations I'm having with my clients, that is still an issue. Access to talent is still difficult in particular circumstances. So I was slightly surprised to see that come off in those two cases. No great surprise to see technology and AI at the top of the list. I think there's probably a distinction, though, that we need to make between those two things. When we talk about technology, more businesses than ever before are facing into the fact that their operating systems are aged, probably legacy on-premise solutions, and they're going to have to do something about that. It's not really a discretionary spend. So they're facing into the need to embrace the cloud. They're facing into the need to improve their data management. They're facing into the need to shore up cybersecurity. These are all things that I would have in that kind of technology spend bucket, I guess, of activity. AI is the one that is the top of the list when people have this conversation, though. And, so we found in the survey, it came top.
On the topic of AI, how are organisations approaching getting their return for their investment, and what sort of opportunities are there?
Maybe 3 years ago, there was this huge wave of optimism about the impact AI would have, and it was going to change business models and turn what we do upside down. I think that's calmed a little, and businesses are now being much more deliberate, much more thoughtful about what investment in AI actually means to them. So they're looking at the processes that take place across their organization, and they're looking at where they can deploy AI solutions in those processes. So a bit more thoughtful, a bit more specific. They're looking to drive efficiencies. They're looking to drive better decision making. They're looking to drive cost reduction, all of which is achievable. I think the back office has over the last couple of years has been the obvious start point. So when we talk about trying to drive efficiencies into back office infrastructure, we see its deployment in shared service environments. We see its deployment into improving finance processes, HR, procurement, all of those sorts of things. So definitely that is an area that organizations have been looking at. I think we're also, though, seeing AI deployed in the front office at the same time. So improving the way that organizations interface with their customers, the way they deal with their customers, the way they communicate with their customers. So it really is end to end across the organization, but it tends to be in pursuit of efficiency, whether that's operational or financial.
The Barometer insights around acquisitions and growth is quite interesting. Almost a third of private enterprises are looking to acquisitions to grow. What do you think is driving that?
I think there's probably a number of things, to be honest. In a world where, we talked about headwinds earlier, the economy is challenging. It is difficult to drive super growth just at the moment. And yet, I'd be really surprised if we came across any business that didn't have that ambition for growth and development. So how do you go about doing that? Of course, organically is part of the answer. But I think that it would be remiss for boards not to be thinking about M&A opportunities. I think it's been reasonably benign. The conditions have been quite slow over the last 2 or 3 years. We haven't seen a huge amount of deal activity. And yet, certainly from a UK economy point of view, private equity is a significant owner. So they've deployed their capital across a whole range of assets. At some point, they need to exit those assets. So there's this sort of pent-up wall of activity that we've all been expecting for some time. And I for one, sincerely hope that 2026 we start to see that. I think for businesses, though, making those decisions, why would they do that? Why would they turn to M&A? I think it's a way of accelerating those growth ambitions, particularly around acquiring new technologies or new capabilities or workforce skills, talent. You can make a real change, a step change, with carefully thought through successful M&A activity, probably quicker in the current trading environment than you can do organically.
The Barometer shows quite a lot of interest in international expansion. What's sort of driving that? And are there any particular countries that UK enterprises are interested in investing in?
Yes, I think what we see private business owners thinking about is where will growth come from, and they're not restraining themselves just to domestic markets. We talked earlier about how are they achieving that growth, and yes, there's a degree of investment into new products, new services, but new markets is absolutely part of that conversation. And in answering that, I think private businesses have come a long way over the last few years and are beginning to look further afield. So I guess it's no surprise in our survey this time round that we see Western Europe being the most common start point for businesses looking at overseas markets. It's the most easily accessible just geographically. Eastern Europe is in there as well. I think there are a couple of interesting dynamics, though, from this year's survey, and I do see them playing out actually in client conversations. So despite all of the discussion around tariffs and restrictions and dealing with North America, it stayed reasonably stable. I think about 12 months ago, mid-30s of our respondents were looking at North America as an attractive overseas market. It's reasonably consistent in the survey results that we've just seen. So I think that's really positive. What we did see this year was a rise, though, in Asian markets, and UK-based businesses looking to Asian markets as potential opportunities. I wonder to what extent the UK-India trade deal has sort of strengthened that and aided that spike. But I imagine that's a dynamic we're going to see continuing.
And China as well. So recently, the Prime Minister sort of went to China for a trade visit. And do you think that might be an area of interest for private enterprises?
Undoubtedly. I mean, I make the same comment in respect of North America as I would to China. It is a huge market. So is it an opportunity? Yes, of course it is. It probably needs a bit of careful thought about how to access, how to operate, what's the best model for doing that.
We've talked about investments in acquisitions, AI, and people. How are private enterprises funding that?
I think there might be some unique characteristics here for private businesses just to think about, because I think in the private business world, most organisations tend to look to their own balance sheet. Remember, these are organisations where there's an owner of the business whose wealth, whose future is tied up in that business, and they're keen to be as self-sustaining as they can be. So they're looking to fund a lot of it. And I think actually our survey results suggested that most of that was the most popular source of funding was a business's own balance sheet. It's not the only source of funding, though. Of course it isn't. So one of the interesting dynamics, I think, if you cast your mind back 7 or 8 years ago, I think a lot of private business owners were a little bit reluctant to think about private equity investment. They were concerned about the notion of ceding decision-making and control to a third party. I guess, I suppose I would observe the fact that private equity investors have become much more aligned in terms of their goals with the private business owners. They're becoming much more, not sympathetic, but aware of that particular dynamic. And they've found a way of working with management teams and leadership groups, which is, as I say, more goal aligned. And I think that has meant that we've seen quite an increase, actually, in the number of private businesses prepared to and actively keen to look at private equity investment as a source of funding. So that's been an emerging dynamic that's been good to see, actually. I mean, it's enabled them to do things that maybe previously they might not have been able to get at quite so readily. Interestingly, there are other sources of funding. I think probably lower down the list, you've still got traditional bank debt funding, but there is quite a gap between that desire to be self-sustaining and take external debt funding.
So, Euan, we've talked about investment, we've talked about growth, we should probably cover risk. What is it that private enterprises are saying about risk? What are business leaders thinking about right now?
In the conversations I have, Krishna, I think it's slightly, I get the point about risk. I think it's slightly broader in the way it's being interpreted today. I think businesses are talking more about resilience, of which risk is clearly a part, but they're talking about the resilience of their operating and business models. And that covers a reasonably broad church, actually, from supply chain risk, workforce risk, cyber risk. There's all sorts of things. I think part of the reason for that, though, is the world has changed remarkably quickly, and most businesses I talk to have some element of a risk register or risk processes in play. But to what extent are they still relevant? Are they still highlighting the things that really are a risk to their organisation, given the level of change that we've seen? So many boards that I talk to are revisiting that and are just thinking about what are those potential black swan events that would impact their business, and are they pursuing those activities that would mitigate the right risks, if you like. So they're just having to be a bit thoughtful about whether they're managing the right things. It probably is worth calling out one particular element of that conversation, which is cyber security. I mean, we've seen a huge increase in the number of respondents to this year's survey who were pointing at cyber risk as being something that they're conscious of. I think 70% suggested that level of increase. So I think that's probably exacerbated by the very public nature of some of the challenges that we've seen, particularly around some of the big retailers that have been impacted this year. But we've also seen the knock-on impact, not just in the business that's been attacked or targeted, but the supply chain to that business as well. There's a huge implication to this stuff. So I think the reach of the potential downside means that businesses just can't afford not to focus on cybersecurity at the moment.
nearly up to our 15 minutes. But Euan, the last question we always ask is, what is the big takeaways for business leaders?
Gosh, well, but remember, our survey was of private business leaders. I think the takeaway for me was it's just great to see the level of ambition and resilience that those business leaders are showing in the way they've responded to our survey this year. I think, we've talked about some of the headwinds that they've been facing into, but they are naturally entrepreneurial spirited and definitely glass half full, Krishna. So it's been brilliant to see that come through. I sincerely hope that is something that we see continue and as a trend. And when we sit here in a year's time, that we only see an increase in that dynamic rather than anything else. So it's been great to see.
Well, that's our 15 minutes up. Our thanks to Euan for joining us today. Don't forget to subscribe to more episodes of The Insight in 15 on Apple Podcasts, Spotify and YouTube. We'll see you again for The Insight in 15.